Yesterday delivered a perfect storm scenario. Gold smashed through an all-time high at $3,759 per ounce, a double top in the short term. That could indeed bring us into a stalemate for the short term at least. While US stocks hitting records for a third consecutive session following Nvidia's announcement of 100 billion investment in OpenAI. Here's where it gets interesting from a market structure perspective. Traditionally, gold rallies during risk-off periods. Yesterday, we witnessed something highlighted as the hedge against major systemic risk. So investors are bullish in equities, but also bullish in gold. This is described as the barbell strategy. So this bet on AI-driven growth is evident while protecting against potential economic disruptions. What are these potential economic disruptions? Well, because there have been no evident catalyst yesterday. I think, apart of course from the Fed being dovish, but that has been the case since last week. So why suddenly gold moved higher on a Monday? Well, I think it reflects the risk of a potential government shutdown as we approach to a deadline. On Thursday or Friday, Trump is going to meet to propose funding. But here's where the risk lies. If this doesn't go through, it means that the government might indeed shut down. Shutting down the US government would suggest that a lot of economic reports are not going to be published, which would push the Fed blind into October's FOMC. And this sort of political uncertainty might be what creates currently this demand ahead of course, Fed chair's speech as well. So it is indeed an interesting week because we also have closer to the end of the week the PCE inflation. So maybe this is just a Monday, Tuesday, Wednesday consolidation, Thursday, and then perhaps we see a breakout on Thursday or a Friday to the upside or to the downside. Since I always look at markets, within a sort of impulsive eye, given of course there is a trend, this to me reminds a fourth wave in Elliott wave terms, if you may. So I am looking for a potential consolidation that could be fueled um, by any of these catalysts to the upside. Okay, if of course there is a government shutdown, or if the Fed chair becomes a bit more dovish in his speech, or if the PCE comes in, less hot than expected on Friday. However, if any of these events, of course, don't work the way that would act as bullish catalysts, then we could see two potential scenarios play out. One would be the scenario of the top being in, and maybe we're going to see prices actually moving ahead of Friday higher. And so we would see something like this, and then from there we decide whether we'll go up, we'll continue lower. And the other scenario would be something like a deeper correction here for the fourth wave, then the fifth, and then move to the downside. However, this has to be quite fast for the fourth wave because the second wave has been a bit fast. So we want this to, in terms of speed and duration, to last around the same time. So a break to the upside is going to bring into focus, and we do use this typically the measured move projection, because there's two ways to do this though. This would be 100% Fibonacci extension of the previous correction, which brings us up to around 3,800. The other would be to look at the breakout level. In this particular case, maybe I would go as doing something like this, which given from that breakout point brings us up to 3,740, which has currently created support, and this is a good indication. If we do lose this support in the short term, we could actually go back to 3,700. If we remain, that support could consolidate, which would eventually uh, suggest a move to the upside. However, it would probably come with low and slow momentum and would create another divergence, which eventually could mark a top, a local top at least. Now, um, apart from these two, okay, what else we would do is measure the distance from this bottom to this top, and then we would put this all the way up here, and then we see that we have this 3,800 and level, $3,800 dollars level coming up right now. The interesting thing is this level also is a level that we have identified long time ago when we're talking about this triangle. Okay, um, because if we use that measured correction move in the one case brings us up to 3,885, but if we did do that from the breakout level, it brings us pretty much at 3,800. Now, given we're also in price discovery territory, okay, and we have two of these potential extension levels clustering up at 3.8, and this is a psychological level, of course, then I think there are high chances of a potential resistance at this level. How we get there, though, it's still a no. What I would be looking to do, as we did something similar, of course, when we reach this high, because what we did is that we actually called the top due to quite a few divergence signals that we saw and the loss of momentum. Currently, I see this as being a wave three, to be honest, because there is a lot of momentum in the RSI. But yeah, the my thinking is this: that the short term is probably going to give us a consolidation, perhaps even a move a little bit lower, then a fifth wave up, and then is when we are probably going to start looking for shorts around the 3.8, because this resistance is likely to create a more downside momentum at 3.8 rather than a little, versus what we currently are standing at 3.75, 76. We don't have um, we don't have a good case for a potential uh, downside with momentum. That doesn't mean it cannot happen, but it means that the chances are actually leaning towards a consolidation here versus a larger move to the downside. Given, of course, that the 3.8 is also a magnet zone and should attract uh, long positions from lower territories. One of those, of course, that might just be what we currently look at. So if we are going to assume that we have a local top currently, which we do, double top. We're going to measure we're going to use the Fibo to measure potential, to identify potential levels. So if we do lose 3.74, we're going to go down to 373 and then lower to 7310. This correction, although it might be looking to you something like a big correction, it's a mere pullback. A deep correction would be down to 61. The 38 acts as a pullback level. And of course, a leg to the upside could ensue. Um, Assuming this is a 5. There is also, of course, potential for a appreciation from here. If it happens quickly, we would go and use the new levels to update our Fibonacci support levels. But one way or another, personally, I'm more interested at looking at short positions at 3.8. But for those who are interested in long positions for the fifth wave, which is, of course, the riskiest wave to go and trade, but in commodities, fifth waves typically do accelerate quite a bit, I would be looking at probably something like this. I would be looking to place my stop below this high momentum candle, because that could be like a last resort for this potential pullback. And I would be looking at the 3.785 consider potential take profit targets. On the other hand, if we do break this uh, level with force, and we could essentially see something like this. If that happened, then I would probably be looking for shorts, and I would be looking for shorts. Depends on where we are. The entry would depend on the downside breakout. Of course, I would be looking to put the stop just above that high, and I will be looking as first target uh, down this potential level. As you can see, this trade is not working exactly as we would want it to be currently because we don't have it's based on assumption. The entry would, of course, be at higher levels if we were to move higher. Just think of it, if we are at 376 and we move $40 up, then that means that your entry would move $40 up. So still, good risk reward ratio to the upside for a long position at 374, and a bit of standby situation currently. If prices move higher, we could start looking for shorts once a top kind of looks like it's confirmed, which would of course imply we get a very nice divergence signal on the RSI. We also look at the 4-hour RSI currently, which seems to be moving higher, okay, without of course that um, meaning there is divergence from then to there. I would consider these two peaks very far between one another to consider this as anything of a serious signal. But what could eventually happen is that, on the daily, at least you see that we have that um, reflection here, and this distance for the daily is good. What eventually could happen is we could start slowing down on the 4-hour, okay, which would imply, maybe I think I would, yeah, maybe we would see something like this and then go lower. So it would have a lower peak here, and we would have a higher peak here on the last wave to the upside.